What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today we're doing a trade review for days number 13 and day number 14. So let's go ahead and get into it. So let's start off with day number 13, October 27th, which was this past Friday. So on Friday, I came into the session and I was about $1,000 away from hitting my profit target for this overall account where I can start to be able to take out withdrawals. And the night before, on Thursday night, I just got really focused on that number. And I was like, okay, $1,000. I trade $10 contracts. So that's 100 points away. I can do that in one day. And then I just start focusing way too much on the results and not focusing on the process that will get me there. That process is being able to take good trades time after time, being patient in the market, being disciplined, and waiting for my exact setups and only taking those. But on Friday, I came in and I was just so focused on hitting that profit target and hitting that profit goal that I started to kind of stray away from the things that I was usually used to, and I started breaking a lot of my rules, and it was very frustrating, and it just made me feel like everything that I was doing just was off. But the thing about it is, when I went back and reviewed this session over the weekend, I actually found out that this was a normal day like any other day where my setup occurs all the time. So from 9:30 in the morning on Friday until 4 o'clock p.m. during that session, my setup occurred 26 different times. And within the first 2 hours from 9:30 until 11:30, my setup occurred 9 different times. So it was a very large discrepancy between what I was thinking the market was doing and what was actually going on. I was thinking that it was just one of those days where you just don't see your setup, but it was actually one of those days just like normal where everything is there. So what that taught me was that most days when you come into the market, your setup is going to be there, but you have to come in with the right mindset. You can't just chase after every trade that you see and every setup that you see, because they're all not built equally and they're not built the same. Some of them are better than others, and those are the ones that you got to take. So that's the biggest lesson that I took away from these trades that I took today. So let's go ahead, well, not today, but on Friday. But let's go ahead and just run through these trades real quick and look at the mistakes that I made so we can see what we need to improve on and what we can get better at going into this week. So for trades 1 and 2, I shorted against momentum right here, expecting for the prior low to act as resistance, which is a good idea. But if you want to short, you can't short in front of the momentum. You got to see that momentum come up to your level. And then when you see the prices start to move in your favor, then that's when you get in. But you don't just want to get in front of the momentum. So at this point right here, if I'm looking to go short, I don't want to get in as I see both of these large green candles coming back up into my level. If anything, I should have shorted at the close of this one red candle right here, which would have still ended up in a loss, but it would have only been one loss in this scenario, which I would have been okay to take because it would have fit my trading plan in that scenario. So right there, it's just the lesson to be learned is to not trade against momentum. Be a little bit more patient and wait for your levels to get hit, and then see what the reaction is like, and then decide what you want to do. So those are the lessons I learned on 1 and 2. So then we come back to 3 and 5, and I shorted here as prices broke past the higher low, and I was too early on my first 2 attempts. Now right here, this occurred at 10 o'clock on the dot, and on Friday we had, I think, consumer confidence come out at 10 o'clock. And when the news came out, the market started moving a whole lot, and I just lost my discipline. And I felt like, oh, the market is moving fast. I'm gonna miss my higher low setup if I don't short it from right here. But I shorted way too early the first 2 times, like the note said, and then I finally caught it on the 3rd time. But throughout those entire 3 trades, I took 2 losses and then 1 gain. So I really just came out break even, which is pretty frustrating because you see your setup and it's like, wow, if I could have just been a little bit more patient, I could have caught that. So that's the lesson right there. Even when you see your setup starting to form, you still got to be patient. Even if news comes out when your setup is about to happen, don't let that news get under your skin. Don't let that news make you do something that you usually wouldn't do. Stick to your trading plan no matter what the circumstances may be, and you should be good. So that's 3 and 5 right there. So we come back down to 6 and 7. I shorted right here, expecting for resistance from the higher low to hold, but the uptrend was too strong to short right here. And this is what I mean when I was talking about earlier when I said that I would just try and force trades that weren't necessarily there and try and chase the market and just force something and make something work. Right here at 6 and 7, this really wasn't my typical short trade that I look for once prices break back down past a support level from a previous higher low. The biggest thing that happened was the fact that we had this large up move, right? If all of this momentum has come into the market and prices have not established a higher low just yet, that means that you got to wait on the short sell, because that pretty much means that this type of price action represents the fact that buyers are really just waiting for a better price. So you don't want to just go short because you don't know where the buyers want to step in at. Now, this level before was a major level of support that actually acted as support going all the way back to the pre-market. So it only makes sense that if we had a large up move past that price, when it comes back to that level, maybe it should find some type of support. It's not always guaranteed, but if we had to pick the best candidate for that support to come in at, I would definitely pick this level. So that's not the levels that I should be shorting from. Instead, I should be just a little bit more patient. I would say 6 and 7 were trades where I wasn't quite sure exactly what was going to happen, but I felt like I was going to miss out on the move if I didn't get in. And that goes back to having a mindset of abundance. If you believe that your setups and your opportunities will come all throughout the day, then that means if you see a setup that you're not too sure about, you can just say, I'll skip it. It's no big deal because I know I have opportunity all day long. So that's what I mean when I say I can't chase the market. I cannot chase a profit target. I can only come in here and make the best trades possible based on what I see. And if I feel unsure about a trade, skip it. If it's any doubt in my mind about a trade, skip it, because opportunity is always going to be abundant throughout the entire session. So after that, it brings us to our last trade from Friday, and that was trade number 8. So right here, the notes say I should remember to short based on a recent higher low. The more time that passes, the less attractive that short trade is going to become. Because when it comes to that higher low setup, if you want to short it, you want to short it as prices are breaking back down past it. So if we look at this higher low right here, notice how we formed a higher low, and then once prices broke back down below that level, then that's when you can short from. But if you look at 6 and 7, notice how I tried to short based off of that higher low, but too much time had passed in between it, which kind of invalidated that higher low break a little bit more than it usually would if it was less time that had passed. So remember, the more time that passes, the less reliable that setup is going to be. So when it comes down to it, trade 8 basically represents not trying to just stay fixated and married to one level on the chart. You got to understand that as new candles and new price levels start to come in and each candle is formed, the information in the market scenario, it changes. The shape of the market, it changes. So if the market context has changed, you don't want to necessarily take the same trade that you were thinking about taking 10 or 15 minutes ago, because the market scenario is not the same. So overall on Friday, the biggest lessons I learned were that my setups are in the market. I shouldn't chase anything that's outside of my trading plan. The only thing I should do is come in and look to trade that higher low strategy that I always use. As long as I stick to that higher low strategy, I should be good. So that pretty much brings us to the trades that we made today on October 30th. So let's go ahead and break it down and look at what happened when the market opened. So we had a very large move to the upside, and that right there lets me know a lot of things. That tells me that, for one, the momentum is to the long side, which means that more than anything, I should be looking for long trades only, no short trades, unless we start breaking down past major levels of resistance. So let's talk about trade number 1 today. So trade number 1 occurred right here, and if we read the notes, it says, I went long here during an uptrend as prices came back to retest the support level of the higher low. Now, when it comes to my higher low strategy, that's exactly what I want to look to do. I want to find a very strong uptrend where higher highs and higher lows are being created. I want to wait for prices to come back, retest a support level of a previous higher low. And once they come back and retest that level, I want to go long and take it back up to my scalp target. So that's what I was able to do on trade number 1. And I was patient enough to just kind of wait for my best setup, because I had a higher low that got formed a little bit earlier before trade number 1. But I chose to skip this trade because I just wasn't quite sure about what this little doji wick right here would represent. I wasn't sure if this was an indication that the buyers were in control or that the sellers were in control. So I'm like, okay, I don't really know what's going on right here. So let me just skip that trade until I find something that's a lot better and a lot more appealing. And that's the reason why I ended up taking that long trade right here at number 1. So then let's move on to trade number 2. So I went long here. So here's trade number 2 over here on the right side. So I went long right here once a higher low formed after a high volume push to the upside. So the high volume push came on this very large candle right here where we see prices just spike up on crazy volume. This was actually the highest volume candle since the market opened. So whenever you get that second highest volume candle of the day after the market opens, you need to understand that something very important is going on. Now, you can't always gauge exactly what that something important might be, but just know that within the next 10 to 15 minutes, something is about to happen. So then you just have to read the context clues that the market is giving you in order to figure out what that may be. So on today's day, after we saw the large spike, I'm like, okay, we pulled back a little bit, and then the buyers finally came in and established support right here. So I said, okay, this is a higher low. Now this is an interesting higher low because this is a higher low that has a long tail candle wick. I wanted to talk about that really quickly because when you run into those long tail candle wicks when it comes to the higher low, it can be a little bit different than what you're used to when you're using a regular higher low when you're just trading off of a singular support level. So let's just read this example from February 22nd, 2021, just to get a good idea of what I was looking at trade number 2. So this right here is a great example of a downtrend reversal with a higher low established that has a long tail wick. In a normal downtrend reversal higher low, you look to go long at the close of where the higher low was, which means that you go long at the bodies. But in situations like this, when you see a long tail wick, the best thing to do would be to draw a zone. So you use the close of the bodies as the top for A right here. So you start the zone right here, and then you use the lows of the wick as the bottom. So the higher low occurred right here, right? So this was the body, and then this was the wick. So you use your zone to go from the bodies to the wick, and then you pretty much will give you an area of entry that should work fairly well. Remember that you still want to aim to buy at the lowest possible prices that you can. So all in all, on this example today, from 2021, on this example, notice how you came back down to the bottom of the zone, and then that's where you got the best entry to go long from. You could have went long up here at the bodies, but you would have had to sit through a little bit of drawdown. And if the session is really volatile enough, your stop might get hit because it might not be large enough to go below the lows at point number B. So always remember that when you're looking at a long tail candle wick. And that's pretty much what I was running into today. So let's go ahead and bring back up the chart that we were looking at for today's session. So when we look at trade number 2, this is an example of what I was just talking about, where you have the higher low, but you also have the long tail candle wick variation of it. So notice how in this specific scenario, I did go long at the bodies, but only because I felt as though the momentum from this up move from this one candle was so strong that it only made sense to get in at the bodies, because the initial move might just move to the upside and then it might come back to test the bodies later. I didn't know that for sure at the time. I was just making an assumption based on the information presented to me. But what's interesting is that after this trade got hit for take profit, notice how prices came all the way back and they retested those wicks at the bottom. So that's what I was talking about on that example from earlier, when I say that sometimes the best entry is still going to be at the bottom of the wicks. Now you might just feel like, man, the trend is so strong, why would it come back down to the bottom of the wicks? Sometimes in the market, that's just how it goes. And if we go back to the live chart, we can actually see that after they came back and retested those wicks, the uptrend continued. So since we're talking about it now, let's go ahead, delete this line right here, and let's put a zone right there. So we take the zone and we start at the bodies, and then we go all the way down to the bottom of the wicks. And then boom, look, we had a perfect test. Perfect. And then after that, we formed a higher low. And then the uptrend continued and we made a new high for today. So that's what I'm talking about when I say sometimes that long tail candle wick will give you a zone, and then the best entry to get in from is the bottom of the zone. But in some scenarios like today, you can have occasions where if you go long at the bodies, you'll still be good. So that was pretty much all I wanted to do today. I came in, I took 2 good trades that aligned with my trading plan. So I felt like I did what I needed to do. On Friday, I was down by 700. Today, I was up by 3. So that's not bad. Working our way back up to make those losses all the way back, and then eventually make our way to a new account high and work our way back up towards that $80,000 profit target that we're aiming for. So all in all, I feel like today I came in, I followed my strategy the way that I was supposed to, and I came in with a mindset of abundance and a mindset of patience. I came in today and I said, look, I'm here from 9:30 until 4 o'clock if I need to be. And I'm going to take the best setups that present themselves to me, and everything else other than that, even if it's a B plus setup, I'm still not taking it. I'm only taking my best possible opportunities. So whenever I come into the market with that type of mindset, I usually do very well. And that's a drastic difference from the mindset that I had on Friday. On Friday, I was just like, look, I got to hit a goal. I got to reach it. And I got to make every single trade that I possibly can. That's going to make you chase the market and make you have FOMO and make you make a lot of bad decisions during that session. So today was very different. The mindset was different. And I feel like that really is the biggest determining factor in trying to figure out whether or not you're going to be successful that day or whether or not you'll take some losses. The mindset is the most important thing. If you believe in your strategy and you trust in it, you need to come into the market and follow that. So that means having discipline and having patience. So as long as I continue to work on those things and continue to be consistent with those, I feel like I should be able to come in and make really good trades and try and build this account up and keep going and keep taking the steps forward as I climb the ladder to success. So that's all I got for you guys today. I appreciate you guys for tuning in for another video. I hope you learned a lot about just being patient and disciplined. And I hope you also learned a lot about the different variations of a higher low. You can have a variation where it just comes back to retest that level of support, but you can also have a variation where you have that long tail candle wick and the best entry point would still be to get in from the lows. So that's all I got right now. I'll be back tomorrow on October 31st, 2023, ready to do it again. But until then, you guys have a good one, study hard, and take it easy.